What's up, Lee?
Not much. How you doing?
Good man, how are you?
Good. Just recovering from 4th of July. How about you?
Yeah, I feel that. I'm in the same boat.
Getting things back to normal again.
Exactly. Exactly. We'll give it probably 2 more minutes here and then go ahead and get started.
Sounds good. Go get me some cup of coffee real quick.
Yeah, right? Oh, I need it.
Be back.
All right, well, we will go ahead and get started. All right. Well, here we are, another week of Be the Market Expert, and we are going to start with Logan Motoshami again. So let's kick off with our weekly market update. So, pending home sales. We're going to skip through mortgage spreads and 10-year mortgage. All right, pending home sales came in at 71,173 as opposed to last year, which was 66,967, which is about a 6% increase year over year, even with the mortgage rates hovering near their highest levels of the year. So now, over the next couple of weeks, we need to remember that the holiday weekends can temporarily impact the data. And that's why it's important to focus on the overall trend, not just one week. So, pending sales are obviously one of our biggest leading indicators that we have today because contracts become tomorrow's closings. And the encouraging news is that the buyers are still waiting for contracts. So, considering the challenges we've had this year, higher mortgage rates, the economic uncertainty, and obviously with the holiday seasonality, it's a pretty positive sign for the housing market. So, if you've ever been coming to this class each week, you've probably noticed a pattern. The market hasn't been booming, but it also hasn't been slowing down the way many people predicted. Every week, we continue to see buyers adapting to today's market instead of sitting on the sidelines waiting for the perfect time. So, yes, the higher interest rates have slowed some activity, but they have also become the new normal for many buyers. People still have jobs, families are still growing, and people are still relocating. Life continues to create housing demand even in a higher rate environment. And I think we're seeing the same thing across much of Colorado. Homes that are priced correctly and marketed well continue to attract buyers. Yes, the buyers are taking a little more time to make their decisions, but they're still making them. And that's why producing the pricing strategy and the strong communication before listing continue to matter more than ever. So now, as we dive into the pending home sales, um, normally we focus. Now, this is a total pending home sales. So normally we focus on the weekly numbers, but because of the 4th of July holiday, Logan also wanted to look at the total pending sales. And this gives us a better moving average and helps smooth out the week-to-week fluctuations that holidays can create. So here's what we're seeing. Last year or this year, we're at 422,130 pending sales, as opposed to last year, we were at 396,652. That's another strong year over year increase. And again, this is one of the reasons I like looking at both the weekly and the total, is because weekly can bounce around because of the holidays and the weather or the short-term events. But when we zoom out and we look at this bigger picture here, the buyer demand has remained remarkably steady throughout 2026. And that's definitely an encouraging sign. So I think one of the biggest reasons for this that Logan mentions has been the mortgage spread. So even though the mortgage rates have spent much of the year kind of near their highest levels, mortgage spreads have improved compared to the last few years, and that has helped keep the borrowing costs lower than they would be otherwise. And without those improved spreads, we'd probably be telling a very different story today. Now, again, I'm staying in my own lane. I can't speak on exactly what the mortgage spreads are, but definitely they are a key factor in today's market. In Colorado, I think we're seeing the same thing here with the pending sales. We've seen the same consistency. While the buyers are certainly being more selective, they're still moving forward when they find the right home at the right price. The market may not be moving at the frantic pace that we saw a few years ago, but it's proven to be much healthier than many people expected. So let's dive into the mortgage purchase application data. They continue to tell a very encouraging story. So far this year, we've seen 23 weeks of positive year-over-year growth, 10 weeks with double-digit year-over-year growth, and only 2 weeks of negative year-over-year growth. Even with everything that's happened in 2026, the buyers are continuing to apply for mortgages at a higher rate than they did last year. And that's what we're seeing. I think the biggest takeaway from this data is one we've all been thinking about for months. And again, something that Logan talks about is the mortgage spreads do matter, even though we don't dive heavily into them. So even though the rates have remained elevated, improved mortgage spreads have helped keep the rates below that 6.75 threshold that we know that historically once we get above that, the demand typically slows. Um, Now, I think this ties into Colorado. Lenders do continue helping buyers find creative financing solutions, and we've talked about many of those. And buyers have adjusted their expectations to today's rate environment. So instead of waiting for the perfect conditions, they're moving forward when the numbers make sense for their family. So now housing inventory. Let's take a look here. Now, the active inventory did increase from 841,547 to 852,000 homes. During the same week last year, the inventory increased from 831,050 homes to 853,160 homes. So at first glance, you might notice that the inventory growth has started to slow compared to last year. And I know that some people have been surprised by that. But if you've been attending this class, we've actually been talking about this for quite a while. We've expected inventory growth to slow because we're comparing against a period in 2025 when inventory was growing at an unusually fast pace. And now that we're moving beyond those tougher year-over-year comparisons, we can start focusing less on the comparison itself and more on where the inventory goes from here. So the important takeaway isn't that inventory growth has slowed. The important takeaway is where inventory sits today. And compared to the incredibly low inventory levels we experienced in 2020 through 2023, today's market is much healthier. Buyers have more choices and the sellers still have opportunities. And that's exactly what a balanced housing market should look like. Healthier inventory levels are one of the reasons affordability has slowly started improving over the past couple of years. And again, I think that ties into Colorado as well. So as we jump into the new listings, let's take a look here. So 75,360 new homes as opposed to last year at 69,701. And even though we're entering the seasonal slowdown, the new listing activity is actually running ahead of where it was last year. And this is exactly what we'd expect this time of year. As we move through July and into the second half of the year, the new listings begin to decline. And that happens almost every year. The important thing is that listings are slowing, it's that they're slowing on schedule. That is a sign of the healthy, predictable market that we keep discussing. And one thing that this article points out, while we haven't seen as many peak listing weeks as we normally would, 2026 has actually been stronger as far as for the new listings than both 2023 and 2024. And why? Well, that's because improved mortgage spreads encourage more homeowners to make a move. Now, when financing becomes a little more favorable, people are more willing to sell their current home and purchase another one. I think the other comparison is really important, is that it's the housing bubble. So during those years, we saw 250,000 to 400,000 new listings every single week. And today we're around 75. They're not even comparable at that point. So when someone says this feels like 2008, the data simply just doesn't support that. Um, Now, the last one we'll dive into price cut percentage here. So we'll wrap this one up with this section here. So last week, it was 39.54% of active listings had at least one price reduction, and during the same week last year, that number was 41%. So while they remain a normal part of today's market, we're actually seeing slightly fewer homes reducing their price than we did a year ago. And again, I think this is one of the more misunderstood statistics in real estate. And when people hear nearly 40% of homes have reduced their price, they assume the market must be weakening. But price reductions are a normal part of the market and of a balanced market, especially. And so what we've talked about is historically, we're typically seeing 33% of homes have some sort of price cut percentage. And so far, I would say that that's pretty in tune with what we're seeing this year and this week. So everything we've covered today kind of helps explain why the buyer demand has remained steady. The mortgage purchase applications continue to show positive year-over-year growth. The inventory has increased to healthier levels without becoming oversupplied, and sellers are continuing to enter the market at a normal seasonal pace. And when you put all of those pieces together, it's not surprising that the home prices have remained relatively stable. In fact, Logan even mentions that his forecast for slight price declines nationally may be difficult to achieve because home prices, while growing slowly, are still showing modest appreciation. And the same thing in Colorado. Homes, again, homes that are priced appropriately and marketed well continue to sell. So that's all I've got for this article here. Now let's dive into the next one. America 250 is a turning point for American home ownership. So, what's happening in this article? As our country approached the 250th anniversary, there's been a renewed conversation in Washington about the future of home ownership. While a lot of attention is being given to new housing legislation and affordability initiatives, I think this article asks a much bigger question. Why does home ownership still matter? Because at the end of the day, buying a home isn't just a transaction, it's one of the biggest financial and personal milestones in someone's life. And it's easy for us to get caught up in interest rates, inventory levels, and monthly statistics. But our clients aren't buying spreadsheets. They're buying stability, a place to raise a family, and a future. And historically, homeowners have remained one of the most effective ways for Americans to build long-term wealth. So this article actually points out that the typical homeowner has a net worth more than 40 times greater than the typical renter. And that's a powerful reminder of why what we do matters. This article also highlights several efforts underway to make homeownership more accessible. Lawmakers are looking at ways to increase housing supply, reduce construction costs, and streamline permitting, and expanding financial opportunities for more buyers. And at the same time, technology, including AI, is helping simplify the mortgage process and reduce friction for consumers. And none of these changes solve affordability overnight. But together, they represent the progress towards making home ownership even more attainable for future generations. And I think this article kind of reminded me a lot of why I got into real estate in the first place. Yes, we help people buy and sell homes, but what we're really doing is helping people build wealth, create stability, and invest in their future. Sometimes we spend so much time talking about contracts and closings that we forget the bigger impact our profession has. Helping someone become a homeowner can change the financial trajectory of the entire family. And again, we're seeing this in Colorado every day. Even with our affordability challenges, people still want to own a home because they understand the long-term benefits. And whether it's a first-time buyer purchasing a condo or a growing family buying their forever home, the dream of home ownership is still very much alive. Our job is to help them navigate that path to get there. So ultimately with this article, I think the next time you're meeting with a buyer, don't just talk about monthly payment. Spend a few minutes to talk about the long-term benefits of home ownership, building equity, creating stability, and investing in their future. People rarely remember every number you share, but they do remember how you help them see the bigger picture. All right, we're gonna dive into this fun one. The IDX debate, is it time to do away with the Internet Data Exchange? So what's happening with this one? I think it's getting more and more attention in our real estate industry lately. It's called the IDX, the Internet Data Exchange. So don't let the name scare you off. This is really just a technology conversation. Excuse me. But it is a conversation about who controls real estate listings. So some industry leaders are asking whether brokerages should continue to share their listings through IDX or if they should keep more of that data within their own companies. And here's why this is important. Right now, the IDX allows participating brokerages to display MLS listings and other brokerages on their own websites. And that's why when someone visits your brokerage website, they can search almost every listing that's available on the market. If IDX were to disappear, that could completely change how buyers are searching for homes and who controls that experience. And this article explains that this debate has picked up steam after the recent growth of some of the nation's largest brokerages. The thinking, though, is simple. If a brokerage controls a large number of listings, why would they want to share those listings with every competitor? But here's the concern. If brokerages stop sharing listings with one another, smaller independent brokerages will lose one of the biggest advantages they've already had, the ability to offer buyers access to full marketplace. It could also push even more consumers towards national real estate portals instead of local brokerage websites. Ultimately, the article argues that the answer isn't eliminating IDX, it's improving it. And I think this article highlights something much bigger than technology. Real estate has always been built on cooperation. Listing brokers, buyers, agents, the MLS, sharing information has been one of the foundations of our industry. And if we start limiting access to this information, we have to ask ourselves, is that creating a better experience for our consumers? Or is it simply shifting who controls the data? And that's a conversation our industry will likely to continue having for years. Here in Colorado, cooperation has always been one of the strengths of our MLS system. And whether you're a large brokerage or a small independent office, agents have been historically able to provide their clients with the broad access to available listings. And that's one of the reasons buyers and sellers have confidence in our marketplace. So, if you have a client that says, "What is IDX or why should I care?" IDX is what allows brokerages to display listings from across the MLS on their websites. It gives buyers access to more homes in one place and helps sellers get their property in front of a wider audience. The current discussion is really about how listing information is shared, but the goal should be always about making sure the consumers have the broadest possible access to the market. And don't worry about becoming an IDX professional or an IDX expert. Instead, become an expert at explaining why exposure matters. Whether you're discussing marketing a listing or helping a buyer search for homes, just remember this. The more complete the information, the better the decisions your clients will make. So, as we move on to this next or the last Housing Why article that I have, it's why AI will not make residential land development easy. And so,
Chris, I'm sorry. Could I ask a question?
sure.
Okay. In regard to IDX and other platforms, and say clients saying, I can just post my home. Why can't I just post my home on Zillow? Could you speak to that a little bit?
Yeah, I mean, well, one, I don't think as a client you'd ever want to just post on just Zillow. The fact of the matter is that's only one of the many third tier marketing platforms out there. Um, and not all buyers are using Zillow to look either. I think as far as listing, you want to try to get the most exposure you can get. And when you start eliminating that exposure by eliminating who you're going to list to or list on, you're only hurting yourself because, again, the whole thing is to get the most amount of eyes on your listing when you're selling it. So while somebody could say, "Hey, I don't want to be listed on the MLS," that's absolutely fine. But to be able to have that conversation with them, explaining the downfalls that that could have of not actually being open to the public for everybody to see, you're not going to get near the same amount of buyers that you would get as if you were listed on the MLS and other things like that. So.
Okay, so I just want to make sure I'm kind of understanding how Zillow works versus IDX. And if they were to say, hey, we're not going to, if many brokerages were to say, hey, we're not going to share our listings, then is that what you were saying? Like it could just push people towards saying, hey, places like just Zillow, because what is the point if everybody's kind of creating their own tunnel?
Well, I think so. What happens is, say that the IDX goes away. Well, that's a big factor for Zillow because that they're using IDX as well. So that's how they are getting the
Right.
access to all this listing information. So if IDX disappears, then it's only the big brokerages that are going to have the access to their listing information. With that being said, Keller Williams has already taken a step above to stay ahead of this, and we've now got a partnership with Coalition, who is working on the BLX, which essentially would take the process of how we input listings onto the MLS, and it would bring it inside to Command, and then we would sit down with our sellers and we would say, okay, where do we want to market this property on? And it's just hitting a toggle button for each option. And so it's like Zillow, yes, MLS, yes, Realtor.com, yes. Or if they don't want those, you would hit no. But KW has already been kind of trying to get a step ahead. If something were to happen with the IDX to where we'd essentially have the same system built into Command and we can share it across as many platforms as we want to.
Oh, okay.
So,
Thank you.
yeah, good question. All right. So we're going to dive into this AI one. Um, this is not about writing better prompts, I would say. It's about something much bigger. So the article focuses on land development, but the lesson applies to every one of us inside real estate. The author argues that AI is incredibly powerful, which is something that's true, but it doesn't make hard businesses easy. Instead, it makes experienced professionals more efficient. And I think this is an important reminder because there's a lot of hype surrounding AI, and you'll hear people say things like AI can replace agents, and AI can analyze deals, and AI can do everything. But here's what AI can't do. It can't build these relationships for you, and it can't negotiate a difficult inspection. It can't read the emotions in a room, and it can't understand the local politics of the neighborhood. And it definitely can't explain, it definitely cannot replace years of experience in this business as well. So I think the author uses land development as the example. AI can quickly identify potential development sites and it can summarize the zoning regulations and organize the data, but it's not going to be able to answer the questions like will the city approve the project or will the neighbors support it or will the builder move forward or will financing still be available 6 months from now? Those answers again are coming from the relationships, from the experience and the judgment. And the same thing applies in our residential real estate world. AI can help us gather information faster, but it's not going to replace these conversations, the strategy, and the guidance that we can give our clients. And I've said this before, and I do believe it even more after reading this article, but AI isn't going to replace great agents. It's just raising the standard. The agents who embrace AI will save time on repetitive tasks, and that's going to give them more time to do the things that only humans can do, which is build those relationships. And that's where your value has always been, and that's where it's going to continue to be. And I think, especially in Colorado, this is true. Every city is different, every neighborhood has its own personality. Real estate is super hyper local. Every HOA and municipality and local market has its own little nuances. And AI can tell someone the average price in Golden or Arvada, but it's not going to tell them which neighborhood feels right for raising a family or what it's like working with a particular municipality. The local expertise is really where it comes into play, and that's something that AI can't replicate. So, I'll leave you with this thought with this week is don't ask yourself, how can AI replace what I do? Ask yourself, what repetitive tasks can AI take off my plate so I can spend more time serving my clients? And that's where the real opportunity is. Use the AI to handle the paperwork and use your experience to handle the people. All right, jumping into Inman. Just wanted to do another follow-up on this Zillow versus Compass. So how Zillow and Compass listing battle landed in federal court. So last week we did talk about the debate over IDX and who controls the listing. We also talked about it this week. Um, but now it's moved from the boardroom to the courtroom. So Zillow and Compass are now involved in a major legal battle centered around private listings, listing transparency, and who gets to decide on how the homes are marketed. And this disagreement has grown into multiple antitrust lawsuits and could have a lasting impact on how our industry operates, kind of what we just discussed as well, Smita. So, at first glance, that might sound like a fight between two large companies that doesn't affect us, but it does. The case is really about three important questions: who's going to control the listing data? How much exposure should a seller's home receive? And who ultimately decides how the listings are marketed, the brokerages, the MLS, or the portals? And the answers to these questions could shape the future of real estate for many years to come. Now, the disagreement began around the NAR clear cooperation policy. Compass has argued that sellers should have more flexibility in how their homes are marketed, including using private exclusives and phase marketing strategies. And Zillow has argued that listings should be broadly available to consumers, saying greater transparency benefits the buyers and sellers alike. Over the past 2 years, the debate has escalated from policy discussions to lawsuits, injunction hearings, and disputes involving MLS organizations. And now this case is officially in federal court, where a judge will ultimately decide some important questions about the listing access and the competition. And I think it's easy to get caught up on choosing sides here, but honestly, I think there's a bigger lesson here. Consumers deserve clear information. Sellers deserve choices. And our industry works best when those two things can coexist. So no matter how this lawsuit ends, I think it's going to push the industry to continue evolving how listings are marketed while keeping the consumer at the center of the conversation. Here in Colorado, we're fortunate enough to have a strong culture of cooperation through our MLS system. And as these national conversations continue, it's important for us to stay informed because changes at the national level often influence local practices over time. So whether you're representing buyers or sellers, understanding these industry shifts helps you better explain the market. And I think when clients ask about industry headlines like this, don't get pulled into taking sides. Instead, bring the conversation back to what matters most. How does this impact my client today? If the answer is very little, reassure them and focus on the strategy that's best for their transaction. Gen Z just hit a record share of mortgage market. So, um, with this article, Gen Z has accounted for 20% of all mortgage purchase rate locks during the second quarter of 26. Think about that just for a second. One out of every five buyers entering the market today is a Gen Z. That makes this the largest share we've ever seen, and it's only expected to grow as more of the generation reaches their prime home buying years. This isn't just another demographic statistic, it's a reminder that the next generation of homebuyers is officially here. In fact, Gen Z and millennials now make up roughly two-thirds of all purchase mortgages. If your marketing, your communication, and your business are still primarily focused on yesterday's buyers, you're going to be missing tomorrow's business. So one thing I found especially interesting is how this Gen Z is getting into the market. Many are using FHA financing. Some are receiving gift funds from family. Others are using creative down payment strategies that to make home ownership possible. And despite one of the most challenging affordability environments that we've seen in years, they're still finding ways to buy. And that tells us something very important, I think. The desire for home ownership hasn't disappeared, it's simply evolving. And I think this is one of the biggest opportunities agents have over the next decade. Gen Z doesn't expect business to look like previous generations, and they're digital. They research everything. They're going to consume the video. They're going to ask AI questions. They value the authenticity over polished sales pitches. If we can learn how they communicate and meet them where they are, we'll build relationships that could last for decades. A first-time buyer today could become a move-up buyer, an investor, or seller multiple times over the course of their life. And again, I think we're seeing this shift in Colorado too. Many younger buyers are expanding their search to more affordable communities. They're using FHA loans, down payment assistance programs, gift funds, all of that stuff to make home ownership possible. And the agents who understand these programs and can confidently educate their buyers about them will have a tremendous advantage. So, take a look at your marketing this week. Ask yourself one question. If I were a 27-year-old first-time buyer, would my social media make me want to work with me? If the answer is no, start creating content that answers beginner questions. Explain financing. Talk about down payments. Break down the buying process. The agents who are going to educate these first-time buyers today will earn those clients for life. All right, last Inman article. I wanted to kind of make it fun just for the timing of it. America 250, the real estate deals that built a nation. So, as America prepares to celebrate its 250th birthday, or as we already did celebrate technically, I did come across this article that puts our profession into perspective. And it starts with a simple idea. Before there were realtors and mortgages, and before there were MLSs, there was one question that shaped America: who owns the land? And real estate has been at the center of our country's story since the very beginning. We spend so much of our time thinking about contracts, inspections, appraisals, and closing dates that it's easy to forget something. Real estate has always been about opportunity. Home ownership built communities. Land created the businesses. Property created wealth that could be passed from one generation to the next. In many ways, the story of America is a story of real estate. The article walks through some of the biggest land transactions in history. So the Louisiana Purchase doubled the size of our country. Texas joined the Union. California opened the door to the Pacific. Alaska, once called Seward's Folly, turned out to be one of the greatest land investments in history. Each decision was about more than acquiring the land. It was about creating opportunity, expanding the commerce, building communities, and investing in the future. And that's exactly what our clients are doing every day when they buy a home. So I think one of the coolest parts of this article is a reminder that real estate has not just always been about buildings. It's always been about the people. Every home has a story. Every closing represents someone's next chapter. Every property transfer is another family putting down roots and building a future. And we may not be negotiating the Louisiana Purchase, but every transaction we help facilitate has the potential to change someone's life. And we get to witness this in Colorado every day, whether it's someone buying their first condo or a family moving into their forever home, or even a retiree settling into the mountains. We're helping people write the next chapter of their lives, of their story, and that's a privilege that we should never take for granted. So, I mean, I know that people might ask, why do you love real estate so much? And you have to find your own story. But because buying a home is about so much more than the property itself. It's where families grow, where memories are made, where wealth is built, and where futures are going to take shape. I get to be a small part of that, and one of the biggest milestones in someone else's life, and that's something I'll never take for granted. So find your own story and how you can turn that into your little pitch. But the next time you are buried in paperwork or chasing signatures, just remember this. To your client, this is not another transaction. It is definitely one of the biggest moments in their lives, and me, we can never lose sight of that. All right, last article here, change of pace. Home swapping. I don't know if either of you guys have heard about home swapping, but we're gonna wrap this up with so instead of renting a hotel or an Airbnb, two homeowners simply agree to stay in each other's homes during the same time period. No money changes hands, it's simply an exchange of homes. The concept has been around for years. This is the first time I'm hearing of it, but it's been around for years and it's becoming increasingly more popular among travelers looking to save money and experience a destination more like a local. Whether you plan to do it or not, it's another reminder that the way people use and think about real estate continues to evolve. A home isn't just where we live anymore. For some people, it's an investment. For others, it's a vacation opportunity. And for many, it's becoming a way to experience the world while we significantly reduce the traveling costs. And this article offers a few practical tips for anyone considering a home swap. First, check your HOA rules and local regulations to make sure it's allowed. But second, talk with your insurance company to confirm you're covered. And the last piece of it is use a reputable home swapping platform. Apparently, they're out there, which again, I've never heard of, but with verified users rather than trying to arrange exchanges on your own. And the one piece of advice that they mentioned in here is your home doesn't have to look like a luxury vacation rental. People choosing swaps are expecting a real home. And what matters most is being honest, welcoming, and providing a great experience. Now, obviously, here in Colorado, there's probably a lot of people that are utilizing it. I mean, people from all over the world want to visit Colorado for the skiing and the hiking, the skiing when we actually get snow, the national parks and the mountain towns. But this means that a Colorado home could be very, very desirable property for someone looking to arrange a home exchange, and it's just another example of how location creates opportunity. So I don't want to take too much time on this, but imagine telling your clients, I spent 2 weeks in Italy and the hotel cost me $0. It might not be for everyone, but it's definitely something out there, and it's one of the more creative ways for people are utilizing home ownership today. So, real quick, I'm going to jump into the MLS, and then I'll leave you with some final thoughts. So, MLS last week, new listings, we were at 1,543. We're down to 1,022, so we did see a big decrease there. Coming soon, though, we were at 101 last week, and we're at 291 this week, so we do have an increase there. Back on market was 289 last week. We're at 257, so a slight decrease. Price decrease. We were at 2,301 last week. We are at 1,635 this week, so a big decrease there. Pending was 1,234, and this week we're at 1,145. And closings, 1,176 last week. This week we are at 1,282. So, just to leave you with the final thoughts of everything we've discussed this week. So, every week we're bombarded with headlines, interest rates, AI, lawsuits, market predictions, industry changes. And sometimes it feels like everything around us is always changing. And in many ways, it probably is. But after looking through all of today's articles, one thing became very clear. The fundamentals have not changed. People still want to own homes. Families are still growing. People are still relocating. Communities are still being built. And every day, someone is making one of the biggest financial decisions of their life. And that's where we come in. Technology will continue to evolve. AI is going to continue to improve. The industry is going to continue to debate policies and business models, but none of those things are going to replace what our clients need most. They need someone they can trust. They need the market expert, someone who can explain the market, someone who can calm their fears from the headlines, someone who can help them make confident decisions. And that's what's going to separate the great agents from everyone else. So don't let the noise distract you from your purpose. Continue learning, continue adapting, and continue serving your clients at the highest level. Because while the tools may change, the value of a knowledgeable, trustworthy real estate agent is never going to go out of style. That's all I've got for you this week. Please reach out if you have any questions. Thank you for hopping on and becoming the market expert of the week. And hopefully, I'll see you both next week.
All right, Chris, take it easy. Thank you.
Thank
Thank
you.
you.
Bye bye.
Thank you. Have a great day.
Take it easy.